shooting star reversal patterns, one bullish reversal and the other bearish reversal, both mirror image of each other. Now in this video we are going to study about two more mirror image reversal pattern. The bullish one is called the inverted hammer and the bearish one is called the hanging man. Now before we delve deep into the individual patterns, let me reiterate one more thing, that when we are looking at patterns, especially candlestick patterns, the reversal patterns are more important to us than the continuation patterns. We will discuss about one or two continuation patterns towards the end of the reversal patterns, but at the beginning we will study the reversal patterns one by one. So now let us start with the inverted hammer. Now we have studied hammer. The inverted hammer is much like that. How does it happen to be an inverted hammer? You need to have a predefined down trend. Then on a particular day the price should gap down, open, and then the buying pressure should set in. After the sustained down move, the bull should be actually taking control a little bit and push price higher in their endeavor to buy. But what happens at the top end of the day's range, the bears again take control and push price lower, but they are unable to push price much lower than the opening price. So we have a candle whose upper shadow is at least twice the length of the body of the candle, and there should be almost no or very small lower shadow. Such a candle is called the inverted hammer. Like we have seen the hammer, it is just the inverted version of the same candlestick. Now the confirmation of the bullish reversal of this pattern takes place when we see that price eventually moving above the top or the high of the candle. So someone should take a buy trade on that point and then trail the trade with stop loss, because someone doesn't know how long or how far the up move is going to continue. The stop loss initially should be below the low of the candle, but as and when the movement is on upward direction, someone should have trailing stop loss to maximize his or her gain, and always should part book profits at certain amount of movements. Now a similar is the bearish reversal pattern, which is called the hanging man. First there has to be up move, then a gap up opening, and then the price selling or the supply of the security of the stock should push the price lower, but eventually the buying pressure that was prevailing earlier should take the price close to the opening price, but they would be unable to push price much higher. So we have a candle whose body is a small body. The upper shadow should be small or non-existent, but the lower shadow should be twice the body width. And the similar in the case of the inverted hammer also, the body should be small. Now if after one or two candles we see that the price start moving downwards and eventually breach the low of the candle and then move lower, someone should take a short trade with the stop loss above the high of that candle. Now once the moves goes down and down, they should trail the stop loss to maximize their gain, because again they don't know how far the down move is going to continue. Now when we are talking about hammer and inverted hammer, the hammer appears more frequently than the inverted hammer, and hammer is relatively more bullish than the inverted hammer. What happens is, in the case of hammer, is that by the end of the day the bulls are in control. They don't allow lower prices to sustain. In the case of inverted hammer, the bears are unable to push the price below the opening price, but they don't have any kind of control at the end of the day. And similarly, what we discussed about the hammer, if the inverted hammer is having a green body, it is relatively more bullish than a red body inverted hammer. Similarly, in the case of an hanging man, if we are having a red body hanging man, it is relatively more bearish than a green body hanging man. And again, the hanging man is relatively more scarce or less frequent, I would say it is a less frequent than the shooting star. And shooting star is relatively more bearish because the bears are in control at the end of the day compared to the hanging man. So we have studied about the hanging man and the inverted hammer. Now let me show you few examples. Once we look at the examples, we will have a better idea how the pattern works. Now we are looking at the BGR energy daily chart. In the BGR energy daily chart, we can see that two consecutive inverted hammers were formed, and as the price moved higher than the high of the hammer, we should have taken a buy trade and see. Then there was a quick bit of up move and eventually there was a pullback, and that pullback was close to the high point of the inverted hammer candle, and eventually when the price actually moved much higher, as we can see, the stock moved from 130 odd levels to 155 odd levels in a matter of 2 or 3 weeks. So this was a great example of an inverted hammer in the daily chart. Now we will see an example of a hanging man. Let us look at the chart. Here we are looking at the weekly chart of Imami, and as you can see, first there was an up move and then we saw this hanging man pattern being formed. Before that there was a shooting star, and after that there was a hanging man kind of a pattern formed. And see, when on the 2 days later, when there was, or 2 weeks later, when the breach of this low was there, and after that how smoothly the Imami stock fell. It fell from a level of 1200 odd levels to a level of 900 odd levels. So that was almost 25% correction. This was a great example of the hanging man pattern in the weekly chart. So this is all about these two patterns. Thank you for watching the video. In our next video, we will discuss about more candlestick reversal patterns. Thank you.